So I've talked about this before and just updated it for Global Macro Investor, my research service, which is crypto users versus the internet. What we did here, well, Remy did it for me, was we started at 5 million users each. When they both hit 5 million, we then start measuring them. And what we found is that crypto has been significantly outperforming the internet in terms of adoption. We're way ahead of internet adoption. So if we just continue at a kind of slightly slower pace, we get to 5 billion users by the end of the decade. So that's basically total adoption of crypto.
Bitcoin's sharp rally in the last few weeks proved to be short-lived as the cryptocurrency tumbled once again amid inflation fears and geopolitical conflicts. A massive spike in inflation and the ongoing war in Ukraine are the primary reasons for the drop. Food and energy costs led prices up 7.9% last month, the biggest increase in over 40 years. Markets are also scaling back as Russia's invasion of Ukraine is expected to result in a recession across Europe, with inflation expected to increase sharply in that region as well. But Bitcoin was made for this moment, so why isn't it blooming? The global macro investor Raoul updates on Bitcoin as a safe haven and why its value is falling steadily in the recent weeks. Hello and welcome to Money Talks. In today's video, Real Vision CEO and founder Raoul talks about inflation, cryptocurrencies, economy, and, of course, the war in Eastern Europe. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
We're still awaiting. I said there was a 2-week window, and we're in that window. Is there going to be some sort of dirty, horrible compromise that everyone's a bit stinky-nosed at, but it appeases the markets? Or is this going to get into something worse? We have to wait and see. So the markets have been thrashing around trying to digest news flow, which is always why I've said be careful of trading geopolitics. But there are more structural things going on that are interesting. Obviously, equities are still in a bear market. Whether they're trying to find a low or there's something bigger, we don't know yet. My thought process is it's probably more likely to be getting closer to a low. But if we start playing out the full recession card, which the yield curve doesn't yet suggest, then, okay, that could be different. So I'm looking at that. I'm looking at the dollar. I'm looking at the bond market, looking at gold, looking at crypto. So there's a lot of things to look at.
Raoul shares his views on rising inflation and why he considers inflation as a massive tightening of monetary conditions.
Everyone's screaming inflation. But I think of the inflation at 8% as a massive tightening of monetary conditions because neither corporations nor people can offset it with increase in earnings or price rises. So what you've got is a tightening of monetary conditions, particularly on lower and middle income households, because the earnings gap is massive between wage growth and the inflation numbers. And that tends to slow growth. And we're seeing forward-looking indicators suggest that growth is slowing down quite fast. And that will play out not immediately, but in the next 6 months. So I'm looking at this thinking, could everybody be kind of wrong at bonds? I mean, the last time it got to 2 standard deviations was when Jeff Gundlach was talking about yields going to 6%. They didn't. People are now talking about a structural shift in inflation. Is it possible? For sure. I still think the probability lies in the chart of truth.
Raoul also thinks that the most risk-averse asset in the world is the U.S. bond market and the U.S. dollar. But if we look at different charts, we can expect a structural change in the entire financial market dynamics.
So let's assume that things get worse. We go to my scenario 2 or 3. Okay, that's a more risk-averse world. So the most risk-averse asset in the world is the US bond market and the US dollar. We've seen the dollar scream higher because of this. So everybody's record underweight pretty much the bond market. So therefore money comes into the bond market. And we've seen those kind of moves in stuff like 9/11 and others where, those kind of events move the bond yields. Okay, let's assume the other side. Let's assume that there's a truce that gets called tomorrow, well, we're going to see crude oil down significantly, et cetera, as people start to think, well, the Europeans will cut a deal and they'll be able to get oil and gas and commodity prices will flow, in which case those things turn around, and in which case the inflation pressures come off and bond yields fall. So I kind of feel like we're in a sweet spot, unless I'm going to be wrong. We can see where I'm wrong on that chart, roughly speaking. And that would be if there is a structural change in the entire bond market dynamics. Now, in 10-year bond yield terms, could it get to 225 and still be in the chart of truth? Yeah, fine. So, but it kind of feels like we should be looking for the change.
Raoul Pal also shares his perspective on things happening in the crypto space and where he expects the market to move next. He briefly explains the role of Bitcoin in the current geopolitical conflicts and how the price action will vary in the coming months.
So in answer to right now, I don't know. The chart looks like it wants to go lower again and have another spike low, and that's been my view for a while. However, the crypto markets have not made a new low versus last year. And I think we've thrown 8% inflation, the market pricing in at 1.8 rate hikes, and a war, and you haven't made a new low. It's like, okay, that's telling us something. Now, maybe that can change, but I mark that down as interesting. I've got a lot of technical divergences. A lot of the on-chain activity is very interesting. So I'm still thinking that we probably captured the downside in this 50% down bracket that we've been in with Bitcoin and ETH. So that's where I think we are. We couldn't buy tokens or shares of the internet. We had to find the companies that were going to win. The internet won, clearly. But here we can own the network, right? This is how powerful it is, there's something called that. So Metcalfe's law is the network effects, but there's the other thing called Reed's law. And Reed's law is when you build network effects upon network effects and you get true exponentiality. So if we're thinking here, we're building the foundation layer was the internet, then mobile data, 3G and all of that starts accelerating it, and broadband and all of those things, and then you add the internet of value on top. Of course it's more exponential by its very nature, and the fact that you can own part of the network makes it more attractive for everybody to be involved. Here's a couple of assumptions. So what you can see is in the first 6 years, the internet grew at 76% a year, or 78%. Crypto's been growing at 117%. So it's much faster growth. So we're at 300 million users now. At the same point, the internet was only at 119 million. So you can see the scale of how this happens. So if we assume that suddenly everything slows down in crypto adoption and we grow at the same speed the internet did over the next 4 years, so this is now from year 6 to year 10, we get to 500 million users. So 1.2 billion users. If we just assume the ratio lower, then we still get to, ridiculous numbers of 2 billion by 2026. So it's incredible. And when you're growing at 100% a year, it's 4 billion the year after.
Real Vision CEO Raoul Pal also took to Twitter to offer some advice to those Bitcoin investors who are concerned about the fact that in the face of the current geopolitical tensions, Bitcoin seems to be behaving more like a risk-on asset than a traditional safe haven asset such as gold. In short, Paul wants investors to see short-term volatility as nothing but noise and to instead focus on Bitcoin's enormous potential over the long term. And he still seems to be holding on to his belief that Ethereum is an even better asset to hold over the long term. So, do you agree with Raoul Pal that this current Bitcoin phase is just a short-term volatility? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.